Do you get sick of being asked though, if you are Satoshi?
Well, I mean, it's not ideal. So I knew about Bitcoin very early, like before almost anybody actually. There's a segment of the crypto ecosystem that is convinced that it's not me because I'm saying things that they don't like to hear. The $500K to $1 million Bitcoin is closer than people think.
Hello, live from Cointelegraph's booth here at Paris Blockchain Week. My name's Kieran and I'm joined by the CEO of Blockstream, Adam Back. Adam, thanks for joining us.
Of course, thanks for having me on.
Thank you. I mean, let's get straight to the chase. How many months before quantum cracks Bitcoin?
Many. I mean, I think it's probably still a couple of decades out, but it really depends on how the physics research progresses. But, just to say that today, the current state of the hardware is effectively at the lab experiment stage where they are trying different physical architectures. So different ways to construct qubits, different ways to manage the error correction, different error codes. So really wrestling with the basic functions. And I think, the thing to watch for is a repeatable architecture where they start to be able to scale it. So that hasn't happened to date. And I went to some university courses when I lived in Montreal in the early 2000s. And some of the Montreal universities had really the top global researchers on quantum topics. So I was loosely tracking the quantum hardware progress for interest since, and it's like 25 years ago, right? So, and really the progress has been quite incremental, more linear, not exponential, like with the silicon chips. So I think that's what people are looking for, is when they converge on some scalable architectures and they start to progress at beyond linear pace and answer some of the key technical hurdles. So, but in any case, I mean, I think for Bitcoin, we don't really have to, reach agreement, and there's some unpredictability about the future progress. The defensive and, safe thing for Bitcoin is to prepare, implement and deploy upgrade mechanisms so that people can become quantum ready. And, that gives people a long time to migrate. And if it turns out it's shorter, they can hurry up and migrate, but they'll have the method to do so, and they'll have the safety of, a system that has been well peer-reviewed, right? So another context is the NIST standards, so the National Institute of Standards and Technology, which puts out standards for cryptography, amongst other things. It was only in 2024, that they introduced the first post-quantum signature standard. And so these hash-based signatures that they standardized on date back to 1979, to Leslie Lamport's Lamport signatures. And so these new signatures are optimized versions of that, which is good because it's using hashes, which are very understood, reliable building block. And it's a conservative design, which has withstood, what is that, like 40 years or something at this point, 45 years. So that's the right kind of characteristic. And now the NIST standard signatures are quite large, many kilobytes. So what Blockstream research has been doing, and other researchers, is trying to optimize them for the Bitcoin specific use case. So we put this proposal called Shrinks, which results in a 324 byte signature, still bigger than today's 64 byte Schnorr signatures, but not, manageable. And we also implemented that in Liquid, the Bitcoin layer 2, so that people can try it out. So, we'll see how the kind of applied research progresses, but that's currently probably the main contender for an initial Bitcoin opcode proposal as standard. I think the other interesting thing is the way that people would use that today is they would actually continue using Schnorr signatures, but use a feature of Taproot where you can have an optional additional way to spend that you don't use today, but you have the option to use in the future. So that's a way to, otherwise people may be disincentivized from using it because they don't want to pay the fees for a large signature today. So they could be ready, so quantum ready, without paying the costs today. So I think that's better for adoption, actually.
Right, right. Because obviously, over the last 12 months, we've had people say 2028, 2029, 2030
Right.
as a potential risk. And I know it was only a few months ago, you publicly stated, I think it was to Nick Carter, who was making a lot of noise around quantum computing, and you said it was uninformed noise and it's not helping. Do you think all the FUD that all the Bitcoiners have been making has been impacting Bitcoin negatively? I mean, from
Well, I
a
mean, I
market
think,
perspective, or more broadly from the
yeah,
sentiment towards the asset as well?
right. I mean, I think uncertainty, the markets don't like uncertainty. And also, specialized markets can have information asymmetry, which is to say, the people who understand the fundamentals have a very confident view, but the wider audience of traders are listening to Bloomberg and CNBC, and they may react to uninformed media output, let's say, right? And so that can impact the market short term. Usually the smart money, fills it in. But I think also the institutions are more systematic about risk management. So they actually realize that there's a low probability long tail risk, but they still want to understand what is the risk and is there a way to address the risk? And so they actually care about that kind of thing. But I don't think they're panicked. They just they feel they have the obligation to understand the risks and understand the responses to the risks.
And what do you think about firms like BlackRock, informing investors about the risks of quantum? Do you think that's genuinely trying to protect investors, or do you think there's a little bit of them wanting the price of Bitcoin to go down as well in the short term?
I mean, I think probably BlackRock is aligned with a higher Bitcoin price because that drives more buyers and increases the AUM ultimately. And their fees are, they're fixed basis point, right? So if the price is 10 times higher, they make 10 times as much money. So I think they would be interested in that. But I think it's just that, investment contracts and prospectuses come with risk disclosures. And so I think they have, some kind of fiduciary obligation to disclose all possible risks, including tail risks. So I think they're just doing their job of making sure they've disclosed, all the latest thinking about different risks, basically.
And I mean, you've been in Bitcoin now for the longest period. I mean, looking now at 2026 compared to its early days, how has it evolved? Is it what you thought it would turn out? If back then you were looking 2025, 2026,
Yeah.
would you have thought today that there would be Bitcoin ETFs, the amount of institutional interest there is, people talking about Bitcoin in bars and cafes? I mean,
Yeah.
did you foresee that back then?
Well, I think Bitcoin has grown in adoption faster than people thought. So, 5 years ago, people would say, well, banks won't support Bitcoin, maybe in a decade, governments longer, right? But it seems to actually have all been compressed. So it's sort of faster than people expected. And I think it's generally positive in the sense that, one of the potential concerns with, government and institution, pension funds, fund asset managers becoming involved in Bitcoin is that they would try to, apply their thinking to it. But interestingly, what happened is that Bitcoin influenced them.
Yeah.
So it turns out that, wholesome incentives matter and they're actually quite scalable, because at the beginning, people were mining, there were no exchanges. So the incentives were just between users and then, you've got startups, then public companies providing services. So the incentives seem to scale through all of the stages. And of course, there are some more stages to go, with larger governments doing mining or with sovereign Bitcoin reserves. But even that's happening, I mean, the Swiss National Bank, which is a very respected financial center, has 30% of global offshore wealth. Their national bank is kind of like big hedge fund sovereign, and 1% of its share portfolio is in MicroStrategy, a proxy for Bitcoin. So they have exposure, the Abu Dhabi Sovereign Wealth Fund. So these are big, financial centers with credible Bitcoin exposure. So I think it is, it is happening in places. But interestingly, it seems that those people actually do understand why Bitcoin needs to be a global neutral hard money. And so they're buying it for the right reason, right? Which is they value its properties. So they're actually not, trying to deploy establishment thinking to reform Bitcoin into a fiat system, right? But they're actually understanding and valuing the key properties. So that scalability is positive to see.
Yeah, what's your thoughts, I guess, on Bitcoin now more broadly being seen as a store of value as opposed to a currency itself?
Yeah, I mean, I think that was somewhat inevitable. I saw that coming, many years ago, really, because the reason is this, that the price formation, so what's going to drive the price is more investors than retail payments or emerging market payments. And the reason is that investment is, people put more money into investments than they do into day-to-day spending, and they leave it there for a long period of time. So it's low velocity, whereas retail payments are very high velocity. So, you have a debit card linked to a Bitcoin balance, you buy a cup of coffee or a laptop or something, the Bitcoin is sold by somebody in the payment chain, and so it lasts for a few seconds, right? So it's not really a long-term thing, and so you can support a lot of payment volume with a small amount of high-velocity Bitcoin. So that means it's not really tying down and presenting a big new demand to the market, and it's the long-term demand that affects the price. So I think it's inevitable that for the short term, the investment and store of value use case, store of value is still a very Bitcoin-centric use case, ultimately. The unseizability, particularly if you can't store it, that's what people are valuing. And even when it's in a ETF format, the uncorrelated, or, short-term correlated, long-term uncorrelated factors that drive its price makes it different from gold. It's outperformed gold for periods, different from the stock market. It's definitely outperformed the stock market over longer time frames. And the, just different correlation makes it interesting. Plus, of course, it's still in the adoption phase. So it's growing with adoption as well as, more users coming in.
Absolutely. And, I know you've been asked a million times all week. I'm sure at Paris Blockchain Week it's been brought up a lot, obviously, with the Satoshi flames once again.
Yeah.
I mean, we briefly talked about that last night at the fireside, but I'm curious to know, with that halo over your head, do you ever get calls from random celebrities or people that you just never thought would call you in your life and ask you about Bitcoin, going, well, this is the top guy, I've got to ask him how Bitcoin works? Has there been those times in your...
No, not really. I mean, I guess they have their own networks of people they talk to. And you do see some celebrities, for example, wearing a jacket that's a Satoshi on the sleeves. I saw one recently, right? So, there's a smattering of people in the sort of Hollywood and film sector who are interested in Bitcoin. I think one of the actors on Silicon Valley show is actually a Bitcoiner these days, so that's cool to see as well.
Yeah, TJ Miller.
Yeah, right. Yeah.
Absolutely. I mean, do you ever wonder what your life would have been like if you didn't invest in Bitcoin now? I mean, it's
yeah.
so
Well, I mean,
part of your life now.
Right. I mean, of course, I knew about Bitcoin very early, like before almost anybody actually, because I got the first email, as far as I can tell, that anybody got about Bitcoin because he was using Hashcash and asking about citation. The emails were published in the COPA trial, so you can look at them on the court documents. But, with Hashcash already like in the late 90s, if I would go to a cryptography security conference with a name badge, people go, "Oh, you're the guy that did Hashcash," because it was like
Right.
it was a neat anti-spam technology, so everybody heard about it and they were kind of thought it was a cool innovation, right? So I got used to the phenomenon of getting recognized, at least by name. But so when I got actively involved in Bitcoin 2013, it started to get that same effect, but bigger, right?
I mean,
Because,
now I can only imagine that from the 2013 days of fame to how big Bitcoin is now, it's
yeah,
only rapidly expanded. How do you deal with fame?
I mean, it's just roll with it. I guess that's all you can do. But I mean, it's generally fine because one of the fun things about going to Bitcoin conferences is talking to other Bitcoiners, the old ones and new ones, right? Because you want to see what they're thinking, how they're thinking about Bitcoin, answer some question if you can add a perspective. So, everybody's friendly. They're all enthusiastic about Bitcoin. So, it's all good.
Have you ever had any situations with the ETH maxis or the XRP maxis?
Well, actually that is one reason that there's a segment of the crypto ecosystem that is convinced that it's not me because I'm saying things that they don't like to hear. And so people have like confirmation bias in all directions, right? So, I'm saying if Bitcoin is the only investable asset class, people in the old sector don't like that, right? It's my belief, but that's
Absolutely. Do you get sick of being asked though, if you are Satoshi?
well, I
Or
mean,
you just embrace it now?
no, I mean, the thing is that I understand the fascination, right? Because, in 2008, when they got the email, it just literally didn't occur to me that this was a pseudonym, right? I thought it was just a researcher and that was his actual name, and it's a Japanese descent guy who was building something using the Hashcash algorithm and had read one of my papers. And so, I think that later, like everybody, it becomes a fascinating subject. And so you start brainstorming about, well, who do I know that works in eCash or cryptography or programmers who could plausibly be this person? And you'll have, everybody has their pet theories, like, well, it wouldn't have been that guy because, you interacted with him in the past and he made some other technical mistake, or he wouldn't have done this. So it's like everybody's got their theories, right? So and I think it's actually kind of positive for Bitcoin that it's this sort of mystique that's part of the backstory that we don't
Do you
know,
think
right?
it is a danger though for someone to be the confirmed Satoshi?
Well, I mean, it has caused problems for some people, right? I think Dorian Nakamoto, of course, famously, right? He, opened his door and there's TV crews on his lawn, right?
Yeah.
So I think that was, and he clearly didn't know what Bitcoin was hardly at that point, right? So I think it was a bit disruptive for him. And I think Hal Finney had actually some security problems and attempts to demand he pay Bitcoin. But
Do you ever worry about those security concerns when, there's all the Satoshi claims going around as well?
well, I mean, it's not ideal, but I had this thought process actually in 2013 when I first got actively involved in understanding details, because I was kind of watching since the 2008, 2009, obviously I understood that Satoshi had solved some of the technical problems that we hadn't figured out in the sort of 1997, 2005, when people would, like myself, were trying to figure out how to, the centralized electronic cash system of the previous era had failed, basically because it's centralized and the database went offline. So we were trying to work out how to make it decentralized. And the proof of work became a sort of go-to answer for how could a peer-to-peer network have a bank account, which it can't. And so once we thought about proof of work in a electronic cash context, it became a solution, right? So all of the previous systems were proposing that. But when I got actively, so in 2009, when the network started, I thought, okay, it's cool. He's implemented it. It's running. Let's see if anybody uses it, if it bootstraps. Because a lot of internet things never go anywhere,
Yeah.
right? And so in 2013, it went over $1. You can see things in the news like Slashdot or something, and then it went over $100. And at the time, there were half of the coins mined. So there's 4 years into the network, 2.5 million coins with 50 bitcoins per block. So there were 10 million coins mined, $100. So it was $1 billion. And so then I was thinking, well, $1 billion is a lot of money. That you probably consider that to be bootstrapped, and you were actually a bit late, and you should have paid attention before.
Yeah.
So then I was like, okay, I'm going to try and understand. So I went and read all the papers, all the code, the forum posts, and asked the developers a lot of questions to catch up. And sometime in 2013, I guess there was the Satoshi thing, right? Where they were saying, oh, like maybe Satoshi has this many coins. And like some months after that, it occurred to me that, oh no, like maybe these Bitcoin guys will think it's me and I have 1 million coins and I don't even own any coins. I don't have any money to like, move house or hire security.
Yeah.
So it's kind of depressing thought for a couple of days, but
Did you have that backlash as well? Was there people that were starting to message you as well?
No, they didn't really do much, but it just occurred to me, out of the blue, because this was there and I was involved in Bitcoin before, and obviously people were like vaguely speculating, oh, maybe it's Hal, maybe it's this guy, but there was nothing like the investigative journalists and the documentaries. None of that happened at that stage, but it just occurred to me that it might happen.
Yeah.
And so I was like, it's kind of a worrying thought, but then there was nothing I could do about it. I didn't have the money to take any evasive action, so I just rolled with it. And so, that's the operating mindset basically.
Is it a running joke amongst your mates though, like amongst your personal mates?
Well, I mean, actually, in probably 2010 or 29, I'd have to go look. Some of my former colleagues from Zero Knowledge Systems, which is a Canadian startup.
Yeah.
And we were doing electronic cash for centralized version. And we actually had hired this guy called Stefan Brands, who was David Chaum's PhD student. And David Chaum was the originator of this kind of electronic cash. And so Stefan had a more optimized version. So we'd actually implemented some of these things. So we're interested in it. So there's a group of cryptography guys, some of who worked for me, who, had brainstormed about this kind of stuff and implemented it. And so they emailed me, one of the guys, and said, is it you? And I'm like, no, it's not me. I would have used this cryptography that is more private, right? So I would have used this paper, the Sander and Tashmar paper. And they're like, okay. Right, so that's, that was convincing to them because they knew about that paper.
Right.
And they knew, what type, we co-authored papers and stuff, so I knew them pretty well. But that was the kind of first people to say, oh, maybe it's you, right? It's some cryptography friends, right?
And I guess moving on to Bitcoin's price, I mean, everyone is wanting to know what's going to go on in 2026. We hit near 60,000 early in February.
Yeah.
Is that the lowest for this year? Are we going to go higher?
Well, I mean, short term, Bitcoin is like quite unpredictable, but it does kind of look like that was the bottom probably. And there are quite a few repeat buyers at these levels. The ETFs, and of course the BlackRock ETF has actually net increased Bitcoin this year, inflows. Got the Morgan Stanley ETF, which has just started at a fast start. And then you've got, the treasury companies. So MicroStrategy's stretch products, it's kind of money market, high interest money market like products, kind of implicit over collateralization by Bitcoin reserves of the company is, they started with convertible bonds, then convertible notes, and now these preferred listed stock. And they had like 5 different versions, the Strike, the Stride, and so on. And really the one that sold the best was Stretch. But it's really been accelerating in the last month so that they've actually finally been able to do a week of Stretch selling without selling any Class A shares by ATM and funded, like 10,000 Bitcoin purchases and stuff, right? So their kind of repeat buying is a multiple of the daily mined coins. And they're not the only buyer, right? They got the ETFs. Now, of course, you do have some sellers because for every buyer, for every seller, there's a buyer. So who's selling is the bigger mystery. But you see occasional hints, right? That the Marathon, one of the public listed miners, sold 15,000 Bitcoin to finance pivoting into AI because it had a higher profit margin. I think, all of the big bankruptcies that came, in the previous couple of years have largely sold because they typically sell to dollars or local currency for a reference price. So, the FTX, the other bankruptcies, I think they're all out of the way. And then you've got, I think the other thing that may partly have caused the sell-off from the 120,000 level is historically the 4-year halving cycle, there's been a point at which the market turns and you get the bear market. And it's been like relatively consistent.
Do you think that's still relevant? Because a lot of people were last year debating whether that 4-year cycle is even relevant now.
So I think the fundamentals mean that it should be less relevant, but nevertheless the timing, some people would just sell anyway because they think it might happen, and then they cause it to happen. And then the price falls, and other people defensively, go to cash to find out where the bottom is, and then they'll come back in maybe, right? So it may have been some of that. The Bitcoin market is highly reflexive. So if the price is down, the price is down because the price is down and people are selling, and then the price is up, they're buying, right?
Yeah.
So all momentum effects. And there is actually some technical reflexivity, which is when the Bitcoin price is low, the miners have to sell a bigger proportion of the coins they mine to cover the electrical costs.
Yeah.
And when the price is higher, they don't have to sell as much. So as soon as you get like a little bit of a higher price, mining gets more profitable, and they keep more of the coins, so there's less sell pressure. So, higher price immediately translates into less sell pressure, right? So you do get some kind of rebound potential. Plus, I think there's a slow burn, which is the institutional follow-through.
Yeah.
So, we heard a lot about model portfolios, managed funds, mutual funds, but I think those, there've been announcements about them, but I think they are slow moving in terms of, developing the playbook, doing the legal and accounting work, selecting their custody partners, training their salespeople. It all takes months and, half a year, 18 months. And so I think it's still coming. And it's a big allocation of money in there because most people are not managing a stock portfolio. So their savings are indirect via managed funds. So, they'll have a pension fund, maybe that's managed by a professional money manager. You have a life insurance. So these kinds of things, or an annuity mortgage. So a lot of the money in the world is managed in this way. And so I think, as Bitcoiners, we would like everybody to benefit from Bitcoin. And indirectly, the way probably most people will benefit from Bitcoin is by the professional money managers adding it to the model portfolio. So it's not a 60-40, but it's a 30, 50, 20 or something, and 20 is Bitcoin, right? And so, as you get there, also that will change the picture and bring a lot of money into Bitcoin. And then I think the other thing that affects the price is the stickiness of the investors. So we didn't know with the ETFs if the investors are going to be like the usual. Usually what happens in each cycle is you get new investors who are not, they're not traders, they're not professional investors. They buy when the price is high, and if it falls a bit, they panic sell. So we didn't know how the ETF buyers would act, but they've been fairly long-term view. They haven't sold much. So that's positive because, the more sticky the investors are, the bigger a multiple you get, a money multiple you get. The billion in affects the market cap by more than $1 billion, right?
Yeah, absolutely. I guess, kind of brings on to the next question and the final question. I mean, a lot of people have the prediction of 2030, Bitcoin's going to hit $1 million, or 2031 or 2032.
Yeah.
What do you think, in your eyes, what does Bitcoin actually need to reach $1 million besides just 4 years of nothing? I mean, there's got to be catalysts. What actually needs to happen in these next 4 years for Bitcoin to reach $1 million in 2030?
Not much. I mean, I think just the market dynamic could do it with the current demand almost, right? I think this halving period so far, in my view, could have done that just from the new retail interest and new ETFs, even without the institutions. So we'll see how it evolves. People are sort of have short memories, so they forget the previous halving cycle had three tops. So you had like a 64,000, a 69,000, and then a bit of a bear period, and then a 73.5
Yeah.
right before the halving. So here we are, we're about the time of the first two tops. Maybe we'll get another one, right, in this cycle. So who knows? It's and as you said, there are new types of buyers in the market now, and people can only sell once. So
Exactly.
as you get this kind of consolidation phase where some people are leaving and some new stronger hands are absorbing the Bitcoin.
So what year do you think then, Adam? When are we
It's
going to hit
very hard to predict the timing, but I certainly think, the seven-figure, the $500K to $1 million Bitcoin is closer than people think, actually, personally.
the next 24 months?
Potentially, yeah.
Awesome. Thanks so much, Adam. I appreciate it.
I mean, actually, I have a bet on with somebody that a couple of bets. One is that Bitcoin does that by the end of the halving cycle, which is 2028. And another one that Bitcoin market cap reaches parity with gold's market cap, which is a bit more of a dangerous bet because gold has been, grown a lot in value in the last period, right?
Yeah, amazing. Thanks so much, Adam. I appreciate your time.